Velodyne Lidar Stock has been on a wild ride in the last 24 hours after Amazon announced a deal with them. We're going to talk about the meaning of this deal as well as the potential for Velodyne Lidar. If this is your first time tuning in, my name is Daniel and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Velodyne Lidar. VLDR is the ticker. And so Velodyne Lidar stock rallied significantly, over 90% in the after hours yesterday, following the news of Amazon's investment in Velodyne. Since then, Velodyne has given up most of those gains, is only up around 12-13% now. But before getting too excited, one should understand the deal terms. And so the way I'm reading this is that, this press release, is that at Amazon's discretion, so their choice, over the next few years, they will pay Velodyne up to $200 million. So they're going to pay them up to $200 million to have the right to buy nearly 40 million shares of Velodyne at a price of $4.18 anytime before 2030. So this is $200 million for the option to buy Velodyne stock at $4.18 through 2030. Now, what's of note is that the cost of the shares themselves is less than the warrant premium, which is really saying something in my opinion, because let's understand this for a second. So 39.6 million shares times by 418 is around 165 million versus effectively this warrant itself, which is going to cost 200 million and spread out over time. When I look at this, what this means to me, and keep in mind, Amazon could easily afford to just buy the whole company outright if they wanted to. So there's a lot of data points, when you're looking at this that you should be thinking about. Like, one, this means that Amazon is going very, very slowly here and wants to see Velodyne prove themselves. So they don't want to make that investment. They want to go slowly and pay up to $200 million to have the option to buy. They want to see this over time. They want to actually make sure that it's worthwhile. And it's a really interesting data point because this $200 million, just to have effectively the option to buy it, relative to, let's say, a purchase price of $1 billion, maybe $2 billion, that's a significant premium that you'd be thinking about. So that it really does reflect that Amazon's saying, well, let's go slow here. So what does Velodyne even do? They're a leader in LiDAR sensor technologies. LiDAR stands for Laser Imaging Detection and Ranging, which is used to enable real-time 3D vision of a surrounding environment. You can imagine and you can think about lots of different use cases for LiDAR technology. They've already won some major customers as the world is quickly aiming to develop autonomous vehicles, whether or not it's for everyday driving to cars, drones, delivery trucks, farm tractors, everything. Everything can ultimately be impacted by autonomous vehicles over time. And so it's really a very interesting prospect. And if you're effectively the one selling the sensors, maybe that could be a huge opportunity over time. And management thinks their higher margin software will play a larger role in their business in the future, potentially more than 20% of their revenue in 2024. The reality is that now they're very much a hardware company, and it's all about selling new sensor units. So they talk about selling 62,000 units since inception. I really don't like seeing metrics like this because it's like, since the day I was born, I've sold this many units. And it's like, yeah, I really don't care. It's how much did you do this last year and how does it compare to the year before? And so, in the third quarter, they did 4,000 units that were sold, but they are focused on having more and more agreements where they can be selling these units to different, companies. At the time that Velodyne was coming public, management had very clear aspirations for their significant potential growth, expecting to grow from around $100 million in revenue to around $684 million. So, when the company was going public, this was in July 2020, they were saying, hey, in 2020, we think we can do over $100 million in revenue. And in a few short years, we're going to be at nearly $700 million in revenue. So why is Amazon looking to move so slowly, given that it wasn't that long ago that they were projecting such amazing growth. And arguably, why is Amazon moving so slowly? Arguably, with such little money for Amazon. I mean, Amazon could easily buy this company outright. And the reality is that Velodyne has already massively underdelivered on their expectations, on their projections. Not only did they miss their 2020 revenue projection, where they had guided to about 102 million versus 95 million actual. Their year-to-date revenue, as you can see here, is actually down. So this year-to-date through the third quarter 2021 is actually down 40% year over year. Now, this is partially due to one-time impacts, but also due to declining selling prices of LiDAR sensors. Now, when you say, oh yeah, our selling prices are going down faster than our volume grows, that effectively means that you're a price taker. And so I really don't like seeing that data point. And, it does come across to me as a red flag when I see something like that, like, oh, our prices are declining significantly. Like, for example, you look at Warren Buffett sees candy, and he never talks about, oh, we had this declining selling prices, and, this was a problem for this business. No, every year you're a price giver because you have a strong brand resulting in higher prices. So when I see that sort of dynamic, I go, oh, okay, is there a problem here? And is this more of a commodity type setup? And this was only partially offset by a growth in volume. So part of the reason why their business is declining in 2021 is due to this dynamic of lower selling prices and volume not actually offsetting it. Now, keep in mind that their guidance that I just showed you was from July 2020. It wasn't that long ago. And the CFO is still the same. So I'd say no wonder Amazon is taking their time. There's a lot of sort of proof at this point saying, look, you've already put out crazy ambitious statements that already proven to be wrong. Can't really trust your outlook. So now we need to actually see some execution, and we're certainly not seeing it through 2021 in terms of their actual results. Now, maybe this is a successful turnaround story, but you need to see some real execution from here. Okay, so what about their current valuation? First, a quick plug where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. If you enjoy videos like this, please make a point of hitting that subscribe, hit that thumbs up button as well. Once again, that's at unrivaledinvesting.com, click join the journey. And so while Velodyne stock is down something like 85% from its high during the SPAC craze where things were just going absolutely bananas, they still have an implied market cap of nearly $1 billion, given that the stock price at the time of this video was actually still above the Amazon warrants. So you should factor in the additional 40 million shares that would go into it. So it would be around 230 million shares times by the price. So that gets you to around $1 billion market cap. Now at this point, Velodyne is just too hard for me. Looking at this, I mean, look, it's still $1 billion company, despite the fact that they've completely whiffed on their projections. They're only looking at around 60 million in revenue this year. That's down about 35% from last year. And worse, they're talking about negative gross margins. Gross margins are expected to range between negative 8 and 10%. That's a big deal for me. I don't think I invest really in size in any companies that have negative gross margins. If I do, it'll be purely speculative. It'll be like a 0.1% position for me personally, as it fundamentally means you haven't established a true product market fit. You haven't figured out a way like, hey, I'm going to sell my goods well above my cost. And here it is, they're still selling goods for less than their cost. And, management calls out how there's a delay in moving manufacturing offshore, which would dramatically lower their costs. But still, that's problematic. This is a basic execution problem where there's not enough demand for their goods at a markup to their cost. That's a huge red flag in my opinion. Now, of course, could they remedy that in the near term? Absolutely. But I want to see execution. Velodyne, at the end of the day, still has a lot of growing up to do, and arguably they need to earn back some goodwill after their projections were off by so much. I think for 2021, it was like 150 million in revenue, and now they're guiding to 60 to 63 million. So it just does show you sort of where they're at. And I think it's worthwhile to take a second to reflect. A lot of folks got excited with the SPAC craze. People were bidding it up. Oh, autonomous vehicles, this is really cool. But the reality is that you don't have to swing at every pitch. You can wait for investments that hit the sweet spot. Companies that are price givers. Companies that naturally have higher gross profit margins, companies that have lots of growth, where you're seeing the growth year after year. You're not seeing huge 30-40% declines where our prices are declining, but hopefully our volumes will catch up. You don't have to make bets on those types of companies. You can just say, sit it out. Where companies that have significant free cash flow, not a company like Velodyne, where they don't even have gross profit. Clean balance sheet where you say, oh, wow, you have all this cash and it's building each year, and maybe they even do a buyback as the stock falls down. I mean, that's a huge advantage, having a company with tons of free cash flow. If a company with tons of free cash flow and the stock drops 85%, you could do a huge buyback. And also, just from a business fundamentals perspective, you don't have to bet on a company that effectively sells a one-time good, sells a sensor. You could try to find companies that it's based on recurring revenue. So that way, any new customers, it builds on top of it. So I'd argue, like, from an investment landscape perspective, you can just wait for better plays. You can look for a sweet spot where it's like, oh, this company doesn't check any of these things. Why not just wait for something that hits that sweet spot where it's just an easier bet? It's an easier thing for you to take a big swing on versus something like this, which is just so much more speculative. And even after Amazon gets in, I wouldn't say it's a stamp of approval. It's more of a stamp of, hey, we're potentially interested in your technology, but you know what? Let's see you execute at this point. So anywho, I hope this video has been helpful for you. And the reality is, look, this is a dynamic situation. Of course, Amazon could come in and be like, here's a mega order for sensors, and then the stock goes crazy. So like, I'm not making a crazy call like, oh, I don't think Velodyne's going to go anywhere. It's just too hard for me personally. Like, would it surprise me if it goes up dramatically because Amazon were to put in a big order or something like that in the future? Sure, why not? But I could also say, like, look, it's just too hard, and the risks of it going down significantly even from here is still there. Given the fact that look at how Amazon's even participating. They could have just bought the stock outright versus doing this sort of warrant for $200 million, saying, yeah, we will pay $200 million over, let's say, the next 8 years. We're going to wait and see you execute before we necessarily even want to buy shares. And so that is a data point worth considering. Anywho, I hope this video has been helpful for you. If it has, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.